Hey fellow entrepreneurs, this is Hiley from Credit Renovators back, and I'm going to talk to you today about building business credit, common mistakes. Now, building business credit is a critical step towards securing better financing options, higher credit limits, and favorable terms from our lenders and suppliers. However, many of us fall into the common pitfalls that can slow down or even damage our progress. So understanding these mistakes and learning how to avoid them can help you and help us to establish and grow our business credit more effectively. In this video, I'm going to talk about common mistakes that business owners make when building credit, along with some actionable tips on how to avoid them. So check this out. Mistake number one, mixing personal and business finances. Now, one of the biggest mistakes that many business owners make is using personal credit for business expenses or mixing personal and business finances together, also known as commingling. Now, when you use personal credit cards or loans for business purchases, you not only blur the line between personal and business finance, you also miss out on the opportunity to build your business credit. Now, by mixing your business and personal and using personal credit for sometimes paying business bills, this makes it harder to track your business's financial health and may put your personal assets at risk if your business faces financial challenges. So how do we avoid making this mistake? You want to open a business bank account, you want to get a business credit card to use for day-to-day expenses, and you want to apply for business loans and lines of credit. Now, of course, you want to follow the strategic steps that I laid out in other videos about how to build your business credit. Mistake number two, failing to monitor your business credit report. So just like with personal credit, it's hard to manage what you're not looking at. So just like managing your personal credit, you want to monitor your credit, you want to do the same with business credit. Many business owners neglect to do this, and they don't look at their business credit reports with any regularity at all. Now, this can result in missed opportunities to correct any errors or improve your credit score in any way, shape, form, or fashion. Your business credit report provides a snapshot of your company's financial health and is used by lenders and suppliers to assess your credit worthiness, the credit worthiness of your business. Now, errors and outdated information on your business credit report can negatively affect your score and lead to higher interest rates or denied credit applications. So how do we avoid this mistake? You want to check your business credit regularly, and you want to make it a habit to review your business credit reports from Dun & Bradstreet, Experian Business, and Equifax Business at least once a year, although I recommend you look at it at least monthly. By monitoring your credit in this way, this will allow you to catch any errors and stay informed about your credit profile. You want to dispute any errors promptly, just like in personal credit. You want to dispute any discrepancies or errors on your business report, and then you want to correct those errors quickly, and that can boost your credit score in business just like it does on the personal side. And then, of course, you want to monitor your business credit so that you can track the progress that you're making in building your credit through the steps that I lay out about how to build your credit. By regularly reviewing your credit, it allows you to track your business progress and see how your credit building efforts are paying off. Now, mistake number three is an obvious one. Making late payments, missing payments. So you don't want to have any late or missing payments, because this is one of the quickest ways to damage your business credit score. Lenders and suppliers report your payment activity to business credit bureaus, and this history, it is important to your a reflection of your financial stability. Late payments will indicate instability. Even one late payment can cause a drop to your credit score and make it harder for you to qualify for loans or lines of credit in the future. So how do we avoid this? You want to set up payment reminders using a calendar, an app, or any kind of accounting software so that it can provide you with reminders when payments are due. This helps you to stay on top of them and avoid missed or late payments. You want to automate payments. So whenever possible, use automated payment options, especially on credit cards and loans, to ensure that they get always paid on time. Just make sure there's enough money in your business account to cover these automated payments so you don't trigger any insufficient funds or things of that nature. Then you want to also prioritize your debt repayment. So if your cash flow is tight, you want to prioritize paying off bills that are reporting to the credit bureaus, such as your business credit cards and your trade accounts. This will protect your credit score while you work on improving your cash flow. Mistake number 4, applying for too much credit at once. While building business credit is important, applying for multiple lines of credit or loans at the same time can hurt your score, much like multiple inquiries in personal credit. Keep in mind that each time you apply for credit, the lender will perform a hard inquiry just like in personal credit. This temporarily lowers your credit score. Multiple hard inquiries in a short period of time can make it seem like your business is desperate for credit, which will raise red flags for lenders. So how do we avoid this? You want to apply for credit strategically and only apply for credit when you genuinely need it. Now you want to avoid applying for multiple accounts in a short time frame. And so you want to start with 1 or 2 accounts, such as a business credit card and a trade line, and then build your credit history with those accounts before applying for more. You want to know your credit score. You want to check your business credit scores before applying for new credit to ensure that you're in a strong position to qualify. If your score is lower than you'd like, focus on improving before submitting more applications. Mistake number 5, not establishing trade lines. Another common mistake that businesses make is failing to establish trade lines with vendors and suppliers. This is generally a tier 1 strategy of mine that says that this is where you want to apply for first when you're building credit. The trade lines are credit arrangements with suppliers that allow you to purchase goods or services on credit and then pay for them later. Not only does it help with cash flow, but it also helps build your business credit when these vendors report your payment history to the credit bureaus, the business bureaus. So how do we avoid this mistake? First of all, you want to work with vendors that report to the business bureaus. And you want to make sure that they're reporting to the majors like Dun & Bradstreet or Experian Business. If a vendor doesn't report payments, your credit builder efforts won't be reflected on your credit report. Now, if they don't report, but they are still a valuable vendor to you, I wouldn't recommend not using them. I would use them if they help you in your business, but you might consider asking them, can they make a special request to report, or you can make some more other arrangements to get that credit history that they're reflecting with them, reporting on the major bureaus. Now, you also want to make sure you pay your trade invoices on time. Just like with your loans and your credit cards, paying your vendor invoices on time is crucial for building business credit. You want to establish good payment habits from the start to increase your positive payment history. And lastly, you want to build relationships with your vendors and suppliers. Having strong relationships with them can lead to better payment terms, such as net 30 and net 60, and large trade lines can help you as your business grow and you need more extension for, say, larger inventories. Mistake number 6 is ignoring credit utilization. Now, credit utilization refers to how much of your available credit that you're using, and it's important that you factor that in determining your business credit score, much like personal credit. Your high credit utilization using a large percentage of your available credit can negatively impact your credit score, as it suggests that your business is over-reliant on credit and may struggle to meet its obligations. So how do you avoid this? First, you want to keep your utilization below 30%. You know how it goes. If you got a $10,000 line, you don't want to use more than $3,000, and that'll keep your utilization in a safe zone. Of course, you want to pay off your balances regularly. So if you're using a business credit card or line of credit, you want to try to pay off the balance in full each month to avoid a high utilization. If that's not possible, pay down as much as you can to lower your utilization rate. You want to request credit line increases. So if you find that you're consistently using a high percentage of your available credit, consider requesting a credit line increase from your lender. This can help lower your utilization ratio and improve your credit score. Mistake number 7, overborrowing. So while business credit is useful for growth, taking on too much debt can strain your cash flow and make it difficult to keep up with payments. So obviously overborrowing can lead to missed payments and high costs. So how do you avoid that? Well, you only borrow what you need, so that before applying for credit, make sure you carefully assess how much financial needs you have and only borrow what's necessary. Avoid the temptation to take on more credit than you can realistically repay. You want to make sure that you create a repayment plan so that if you do take on new debt, you have a detailed plan to ensure that you can meet the payment deadlines without affecting your cash flow. And then, of course, you want to monitor your debt levels as well as your score. So you want to regularly review your outstanding debt to ensure that it's manageable and won't put your business at risk. And the final mistake, number 8, failing to plan for cash flow gaps. So obviously cash flow is essential for managing day-to-day operations and covering business expenses. However, many businesses fail to plan for cash flow gaps, which can lead to late payments, missed opportunities, and damage to your credit score. So how do we avoid that? You want to use your credit to manage your cash flow. So a business line of credit can help cover short-term cash flow gaps, which will allow you to pay your bills on time even while waiting for customer payments. Creating a cash flow forecast. So you want to regularly forecast your business's cash flow to anticipate periods where cash may be tight. This allows you to plan ahead and avoid missing payments. And then lastly, you want to make sure you build an emergency fund. Having an emergency fund in place can help your business cover unexpected expenses or slow periods without necessarily relying on credit. So, building business credit is a crucial step for your company to grow, secure financing, and maintain its financial health. By avoiding these common mistakes, you can build a strong business credit profile that opens doors to better opportunities, more lending, higher limits, so you can finance projects and expansion of your business. Remember, building business credit takes time and consistency, much like personal credit. By keeping an eye on your credit reports, making timely payments, and using credit responsibly, you'll set your business up for long-term success. So, I hope that you find the tips here helpful. And if so, I would ask that you please like this video. And if you know anyone who's in business or who's interested in building business credit, share this video with them and they may find it helpful. If you are interested in working with me or allowing me to work with you to help you with your business credit and business funding needs, contact me in any of the ways down in the show notes. You can reach out to me on my website, or you can connect with me directly with phone numbers and email contacts listed there. I also would ask that if you haven't subscribed, please subscribe to my channel, and please comment below Let me know if anything in this video I missed that you're concerned with, if there's any other topics that you would like me to review and discuss, because I'm trying to cover in this series business credit and all the things there, because many of my entrepreneur friends and clients have been asking me about business credit and when I was going to do videos. So I'm completing this series as part of that. So until the next video, see you out there, fellow entrepreneurs. Keep rise to the journey.